Hello, ladies and gentlemen. Good morning to you. I would appreciate if you would confirm that you can see my screen and you can hear my voice clearly by typing hi in the comment section so that we can get the session started. So I will repeat myself. If you can see my screen and you can hear my voice, kindly type in hi in the comment section so that we can get this session started. All right, thank you, Carrie, for that confirmation. Good morning. Cyrus Kyle, hi, good morning to you. How are you? All right. Okay. So I want to welcome you all to yet another promising session of Extra and Speed Live, hosted by my humble self, Sheriff Daramola. And as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using an array of technical parameters to identify trading opportunities lining up for us today. So as we get ourselves prepared for the New York session, the first thing we are going to be doing today is to look at the majority of the pairs we did yesterday. We want to see how well they're doing and what are the updates or follow-up details that is necessary on this pair as we head on into the New York session. And also, if you have any pair you want us to look at, feel free to drop it in the comment section and I will try as much as possible to inculcate it into my plans for today. So without further ado, let's dive into the chart and let's see what is happening here. Okay, so let's see what we have on in the chart. So the first pair we are going to be looking at is the US oil. And what do we have here on the US oil? If you had been live on the chat yesterday, you will notice something dramatic happened yesterday. And I think I warned us about this during the beginning of the week, where I told you we have quite a couple of major events that is likely going to be affecting the major pairs for this week. And let me show you. We saw the consumer price index happen yesterday, which favored the dollar a little bit. And because of this, we saw a massive bullish move for the dollar during the course of yesterday's trading session. And if you remember how important I emphasized that in as much as we were in profits in most of the pairs we were looking at yesterday, I told you to move your stop loss to either lock in some profit or move your stop loss to break even to protect our position against sudden move like that happened yesterday. So today we are also having a major event coming up, as we expect that President von der Leyen is going to make a speech which is likely going to affect the euro. And then we have the gross domestic product for the New Zealand dollar, but I'm not sure we are dealing with the New Zealand dollar today. So we have the euro, which is one of the pairs we are looking at. So we need to take that also into consideration while we make our decision on this pairs today. So let's dive into the charts and let's see. So on the US oil, what did we have here yesterday? We can see that price went all the way back down, breaking down that bullish trend line we identified during the course of the live session on Monday. And remember I told you how the $88 70-cent level is significant, as if you missed that move on Monday, I told you that we should be looking forward to a breakout of that $87 mark, after which a retest to structure will give us further confirmation to join the rally to the upside. And then I told those who actually took advantage of this move on Monday or Tuesday who took advantage of this move to move their stop loss to lock in some profit, or probably move their stop loss to break even. And lo and behold, what happened during the course of the New York session yesterday, we saw how massive this moved to the downside, hereby going into the key level we identified at the $85, rejected it one more time, price continued to the upside from here. So the next thing we want to be doing here is to look out for trading opportunities lining up for us today. And before we do, we would like to scale up to the higher time frame, and this is especially for those who were not part of the Monday and Tuesday session, so you might want to have a better perspective into what our expectations were and how we got to this point in the market. So what I'll be doing first of all here on the US oil is to delete this, as this is no longer relevant. So I'll be deleting this so we can have a clean slate, and then let's look at this chart afresh and let's see if we're still expecting that bullish momentum to happen. So what I'll be doing here, I'll delete this. So let's scale up to the higher time frame. Let's see what we have. And on the higher time frame, what did we have? So if we look at the higher time frame, that is the daily time frame, for instance, we can see that price action has been on a very strong bullish momentum, and this is evident after connecting the series of higher lows to give us that resultant bullish trend line that we have here. However, if we zoom into the structure we have in the last couple of weeks, in the last 6 to 7 weeks here, you can see how price consistently respected that bullish trend line. We saw multiple rejection here in the month of August, and also mid-August we saw a multiple rejection of that level, giving us a clue of a possible bullish trend continuation. That is, price is probably going to be respecting that bullish trend line one more time. However, during the later part of August the early days of the month of September, we saw a significant breakdown and multiple rejection of that level to give us a possible shift in momentum drive. Now that we have this bearish move to the downside, price broke down that bullish trend line which has been holding price action in the last couple of years. We might be looking forward to a possible retest of structure. And remember, from a technical standpoint like this, whenever we cite a breakdown or breakout of structure like this, we expect price to come back and do a retest of the structure, where we will be looking for further confirmation to join the rally to the downside. But in this case, price is yet to come back into that bullish trend line, and at the beginning of this week we are looking forward to a possible scenario where price goes back into the bullish trend line that was broken on the first day of this month, where we will be looking forward to a pattern that will support a downtrend scenario. But that has not happened, and we're actually looking for that bullish momentum here to align with the setup we are looking forward to. Now, the second thing we were able to identify here on the daily time frame is this key level at the $85 mark. If we look at this key level closely, we can see how this level has been a major determinant of price action in the past. We saw here between the month of October and the month of November last year, we saw multiple rejection of that $85 level, which gives us a clue into how the sellers were strong at that particular point in time, and we saw that price move from that point right into the bullish trend line, which was respected one more time before we saw the breakout of that $85 level, retest that pushed price to as far as the $124 area. And what did we have since the month of April? We saw our price rally down into the bullish trend line, also coming back into the $85 level, which I said is a major determinant of price action in the past. You can see we saw the first one here, we saw the second one here, we saw multiple rejection, and then we saw something like a breakdown of that $85 level. So at this point in time, we are not sure if this breakdown is valid. It could turn out to be a false one, as we can see prices right back at the top of the $85 level. And if price does a multiple rejection of this area, then we might be seeing it as a full signal. So now with the $85 level identified, and considering the fact that price is still right above that $85 level, we were going into the week with the intention of a possible bullish momentum back into the bullish trend line here. So when we scale down to the 1 hour time frame, what did we see? So when we scale down to the 1 hour time frame, the first thing we observed here was that price has been on a bullish trend since the later part of last week trading session. And when the session resumed this week, we saw our price consolidated right between the $86.70 area and the $85 area before we saw the breakout of that channel. And hence we saw multiple rejection of that level to give us a clue of a bullish momentum. However, during the course of yesterday's trading session, we saw a second rejection of the $88.70 area, which pushed rise a little bit below the bullish trend line here, rejected the $85 level, which we said was our significant level on the daily time frame, after which price came back right on top and then respected this trend line one more time, and there is a likelihood that price will be going to the upside from this point. So so far on the US oil, we are either break even at this point or probably taking some profit, because remember I told you yesterday that we should either move our stop loss to break even or lock in some profit right above the $87 area. And if you had locked in some profit, you could probably be in about, let's say, 50 to 90 pips in profit. And if you had moved your stop loss to break even, then you will be at break even. That is, you are neither in a loss or a profit position at this point. So now that we are heading into the New York session today, what are we going to be looking forward to? What is our plans? Remember, we have this $86.50 level, which has been our key level in the last couple of days, and it appears we've been seeing multiple rejection of that level. We saw a sharp one here, then we saw another one during the early hours of today to give us a slight understanding into how strong that level is for a bullish momentum. So now, as we head into the New York session, is this level going to hold price action? Well, let's look at the structure we have. Now, if we zoom into what has been happening since the beginning of the week here, we will notice that, hold on a second, let's bring out our line chart, and then let's identify this structure here. Okay, so I would like to give this 1 pixel and then a dotted line, and so what we want to be seeing here is okay, hold on a second, let me draw this out so that so we have somewhere around the 87 $70, I think. So let's label this 87. So we have somewhere around the $87.70 area, which I want to be using as my yardstick going into the New York session today. And now, why did I identify that area? Well, if we look at the structure here since the beginning of the week, we can see how this level has been a major determinant of price action. We saw rejection here before the breakout of that structure happened here, and price came in within this $87.70 area. Multiple rejection, we saw a breakdown. Multiple rejection here. Price broke down significantly during the New York session yesterday, and since then we've been seeing multiple rejection by the sellers of this level. So now, going into the New York session today, we want to be using this level as our yardstick. And how are we going to be using it as our yardstick? Well, what we are going to be doing right now is that if price continues to rally right above this $87 area, we want to be looking for buying opportunities, and if price continue to rally below this level, we want to be looking for selling opportunities. So now, how do we take advantage of a sell momentum? That's the first perspective I want to be looking at here. Well, what we want to be looking forward to is an outright breakdown of this bullish trend line. That is, price breaks this bullish trend line that they identified here. That is the purple line we have here. We see a breakdown of that structure. Then if a breakdown happens, remember, we don't want to get too excited at the sight of that signal. First, we want to wait for price to give us further confirmation, which is likely going to come in the form of a retest of either the bullish trend line here or the $87.70 area, where we look out for structures on lower time frame to confirm the downtrend scenario at this point. Now, if we are going to be selling it right after the breakdown retest to structure, well, I will be advising that our take profit target should be somewhere around the $85 area. Remember, we identify the $85 area as a very strong key level on the lower time frame. So if we are going to be aiming at that, we should be having somewhere around 250 to about 300 pips to catch here if price moves in that direction. So we want to see price come into this area, and let's see if price is going to break down this level or probably reject this level. So it's likely we see a breakdown, retest of structure to the downside, or we could see another rejection of this level where we have multiple rejection or a reversal pattern to push price up. So that's the first scenario we want to be looking at here. Then the second scenario is the likelihood that price is going to be respecting this bullish trend line one more time, where we see an outright breakout of the $87.70 area. If we see an outright breakout of the $87.70 area, so if we see an outright breakout of the $87.70 area with an engulfing candle taking us right out of the structure at $87.70, what we want to be looking forward to is a retest of structure to give us further confirmation. So what I'm simply saying here is that when we see a breakout of the structure, we don't want to get too excited, as we want to wait for price action to give us that confirmation to join the rally. So if the confirmation comes in the form of a retest of the $87.70 level, or probably the bullish trend line here, then we look out for structures on lower time frame to support a trend continuation to the upside. And if we are going to be taking that bullish momentum here, one thing I want to be advising us here is this: if price comes back to do a retest of the structure after breaking out of the $87.70 level, and then we see price moving to the upside, tending towards the $89 or the $88.50 area, I will advise us to move our stop loss to break even to protect our position, as we really don't have an headway yet on this one. And the reason why I'm saying this is simply because of the fact that we have a structure. Since the beginning of the week, we saw a rejection of the $89 level one time here, and we saw another multiple rejection during the New York session yesterday of this level, which gives me a clue into the strength of the sellers at this point in the market. So once price moves in our direction towards the upside here, what we want to be doing is to move our stop loss right above the 87.70 area to protect our position, as we want to see how price is going to relate with the $89 level. And if we finally have a breakout of that level, then we want to have that as a signal that price is actually going bullish. So now if we are going bullish on the US oil, and the reason why we are still tending towards a bullish momentum is, one, we have this parameter here, we have this bullish trend line here. Remember, that's the bullish trend line. That's the first parameter. And then the second parameter is that we have a breakout of the descending channel here. We saw a breakout and multiple rejection of that descending channel to give us a clue into the strength of the buyers at this point in the market. Remember, we had this descending channel that held price into within this area since the month of August. We saw our price consolidated right within this area. Then we saw a breakout, multiple rejection of that resistance point of the descending channel, and we were thinking And with this bullish trend line, we are thinking that the bullish momentum here is going to be strong. So what we are saying now is this: if price breaks above the $87.70 level, price tends towards the $89 area, kindly move your stop loss to break even to protect your position, as we want to see how price is going to relate with the $89 level here. Then if we have a breakout retest of that structure, then we want to be adding more position to our existing trade. So this is how we intend to trade the US oil again during the New York session today. If you have any question regarding what I've just explained, kindly type in your inquiry in the comment section, and I will be willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the chart to see if there are any questions, and if there are none, we'll move on to the next pair. All right, so Rari 41145652900260. All right, good morning to you all. All right, so in the absence of no questions, I guess we move on to the next pair. Okay, I hope that is okay. So moving on to the US tech. The same thing happened on the US tech yesterday. We have a massive move to the downside that happened after the US consumer index report, which favored the dollar, and that's pushed price right, breaking down the bullish trend line we identified on Monday and right back into the $12,000 level, which was our key level on the higher time frame. Now, let's review what our expectations were yesterday, where we took advantage of this bullish momentum. We had a couple of parameters here to guide our actions for the week. The first one is the bullish trend line here. The purple line you can see on your screen was the first parameter we were looking as our yardstick for the week, and then we have the $12,600 level, which was supposed to be our major key level for the week. And what happened? We saw our price consolidated between the 12,700 area, respecting the bullish trend line at the 12,570 area. Then we saw our price respected the bullish trend one more time. Then we saw a breakout of that channel. That's the channel we are talking about here. We saw a channel here, price consolidated here. Then we saw the breakout of the channel, and we saw a retest of structure, after which we joined the rally to the upside. So we joined the rally to the upside on Monday, and we saw how price continued to as far as the $12,900 area. So we had price move about how many pips that is from this point. We took advantage of the trade from this point right into this area with about 200 pips in profit. Now remember, during the live session yesterday, we were at this point yesterday. Hold on a second. We were at this point yesterday. Okay, we were at this point here yesterday before we ended the live session, and what thing I told you here is to move your stop loss to somewhere around the $12,740 area, remember. And I told you that if price comes back into this $12,740 area, where we see a scenario where we see multiple rejection of that level, we want to be joining the rally to the upside. Or if we see price reject that bullish trend line, we want to be joining the trend continuation to the upside. So what happened afterward was a significant breakdown of that level, taking us out of our position at the stop loss at around this area. So we must have had about, let's see, about 70 pips thereabouts on this one before we were taken out. And sincerely, I actually missed this move because I wasn't expecting that this move would be as huge as this. So now that we have the scenario here, and thank God we are not in a losing position in both of the trades we've been taking on this pair this week, as we were cautious enough to have locked in our position to guide against such sudden pullback that I suspected that could happen. So right now, going into the New York session today, what is going to be our plans? But before we go into the plans for today, one thing we want to be doing is to take a cursory look at an holistic perspective of what has been going on a long-term perspective. And this is for those who were not part of the session yesterday and on Monday, so that we can all be on the same page here. So I'll be deleting this one. I want us to have a clear screen. So what I'll be doing here, let's delete this bullish trend line. It's no longer relevant as we already have a breakdown of that structure. So now what we do now is to scale up to the higher time frame, that is the daily time frame, and let's see what we have here. So on the daily time frame, the first thing we will observe here is that price has been on a very strong bearish momentum, and this is evident after drawing the connecting the series of lower highs here to give us that resultant bearish trend line. So that's the first thing we were able to observe here. And then if we look at the structure, when we zoom into what has been happening since the month of June, we can see that we have a reversal pattern here, something that looks more like a double bottom structure, which led into, we had a lower higher low here, and then we saw the breakout of that structure, retest of the neckline area at the $12,000 level, which is also a very strong psychological level. And then we saw our price continue to the upside, though we had a breakout which appears to be false. Price came back within the ascending channel, and we saw the breakdown of that channel. So with a breakdown of this channel, normally like this, when we see a breakdown of structure like this, what do we expect? We expect price to give us a retest of structure to give us further confirmation of a trend continuation to the downside. So now that we have the scenario going at this point, we zoom into what has been happening since the beginning of the month. We saw that we had this breakdown of the ascending channel here. Then we saw price come back to do the retest of the ascending channel. Remember, we have, let me show you, we had a breakdown of the ascending channel. Price came back to do a retest of that structure. And if we look closely into that retest, we can see it shares a confluence with the bearish trend line we have here. And what did we see afterwards? We saw this massive engulfing candle taking price, rejecting that bearish trend line, rejecting that support level of the ascending channel to push price right back into the $12,000 level. Now look at what has been happening on the $12,000 mark since last week. We saw multiple rejection last week of the $12,000 area. We saw this rejection here, and it appears price is back within that level with another intention of rejecting that level. So you will agree with me that with the information we have here, the $12,000 is a very, very strong level. We need to be patient enough to see how price is going to relate with this level. So now with the current structure here, how do we hold on to see how price relates with this level? Now there are two scenarios we want to be looking forward to here during the New York session. Price could either respect this trend line one more time, move right into somewhere around the, let's say, the golden zone area, where we look out for patterns to join the decline to the downside. So now you'll be asking, what do I mean by the golden zone area? Now let's scale down to the 4 hours time frame, and let's identify a golden zone area. There's our 4 hours time frame. Okay, so now what I mean by the golden zone area is simply an area between the 50 and the 70.6% of our previous impulse leg. And now if we look at the previous impulse leg we have here, we have this impulse leg right from the 12,900 area right into the $12,000 area. So what we want to be doing is to bring out our Fibonacci retracement tool, run it through the previous impulse leg here, and we identify the zone between the 50 and the 70.6% of that impulse leg as a place to look out for selling opportunities. So if we draw that out, we have somewhere here. Hold on a second. Let's give this a label. So okay, so let's give this a yellow. All right, so we delete the retracement tool here. So one thing that I'm looking forward to here is, considering the long-term bearish momentum we have here on the US tech, there is a likelihood that price will climb back into the sell zone area. That is where price started this week, after which we look out for patterns like probably a double top structure, a head and shoulder pattern or a rising wedge, whatever reversal pattern that this structure evolves into, we want to be taking advantage of a sell continuation to the downside from that point. So that's the first scenario I'm looking forward to. That is, if I see price continue to rally to the upside here, then I want to be staying at the bus stop at between the 12,600, is it 12,690 and the $12,450 area for the selling momentum. So that's the first scenario we want to be looking forward to during the New York session today. Then the next scenario is this. Are we going to be seeing a breakdown of this $12,000 area? Remember, this level has not been broken in the last 2 weeks now. So if a breakdown of this level happens, then that is a bearish signal. We want to be looking forward to taking advantage of a selling opportunity. However, we don't want to get too excited at the sight of such a signal, as we want to be patient enough to wait for price action to give us further confirmation, which is likely going to come in the form of a retest of the neckline here. That is the key level here. Then we look out for patterns on lower time frame to join the decline to the downside. So this is how we intend to trade the US tech. So we have two scenarios already which has been cited. The first one is if price is going to respect the $12,000 area in such a way that we have price come back into the sell zone here, where we want to look out for structures to join the decline, or are we going to be having an outright breakdown of the structure where a retest will give us further confirmation to join the decline to the downside. So from this both perspective, we can see that we are actually looking forward to selling potential on the US tech. However, if you are a counter trend trader or a short-term trader, you feel comfortable taking counter trend trades, then you might want to be looking forward to buying opportunities at this point. At least we can see in the past, we can see how price buyers have come to the $12,000 area to push price to the upside. And if that happens, how do we want to take advantage of that move? Well, one thing I want to be looking forward to here is if price does a reversal pattern, it could be a double bottom structure, then a breakout retest of that structure on lower time frame could give us that counter trend opportunity. But if you are a long-term trend trader, just hold on and wait for price to come within the sell zone. Then we look out for patterns to join the decline. So that's that on the US tech. If you have any questions regarding what I've just explained so far, feel free to drop in a word or two in the comment section, and I will try to be of help. So what do we have here? Okay, 359 coming in. Good morning to you. How are you doing today? Glad to have you around. All right, and then Ashitaka says USDX. Okay, US index. All right, let's see if that's going to be possible. We'll look at it. All right, good morning, Hazel. Good morning to you. Okay, so let's move on to the next pair. I think we still have some more time. So what's the next pair we treated yesterday? Hold on a second, let me check that out. So we looked at the AUDUSD, which also was affected by the consumer price index yesterday. So we saw the scenario yesterday. Hold on, let's go back to our 1 hour time frame. So let me quickly do a replay of what actually happened yesterday. So we were actually in profit yesterday on the AUDUSD, where we took advantage of the breakout retest of the structure after price was caught within a consolidation phase yesterday. We saw the breakout retest of structure. We were actually in profit on this one when I told you, I think we were somewhere around here yesterday when I told you that we should be moving our stop loss to break even at this point. Now, we witnessed the breakout of the structure, and I told you move your stop loss to break even, and if price comes back into the structure here with multiple rejection, we want to be joining the rally to the upside. So that's what our plan initially during the live session yesterday. But lo and behold, thank God we moved our stop loss to break even, and we saw our price significantly broke through the structure, came back into our entry zone at 0.68700 level, break it down, break down the key level at 0.68500 to move to the downside here. So this is the scenario we had here on the AUDUSD. So we are neither in profit nor lost on this pair as well. And I think that is something we need to look at today. So now let's see how we want to trade the AUDUSD today. Is there any opportunity lining up for us? So I would like to delete all the structure here, and let's scale up to the higher time frame where we want to take a quick look at how price action has been playing out in a long-term perspective. So right now on the daily time frame, what we have here is a very strong bearish momentum, and we were able to connect the series of lower highs to give us this result on a bearish trend line. And remember, we have this major and temporary bearish trend line. The major one is the thick black line, and the temporary one is the black dotted line. And we can see our price has consistently respected that bearish trend line, and that's exactly what happened yesterday as well. If we zoom into the structure yesterday, we can see how price rejected that area and pushed to the downside at that point. So right now, the engulfing candle took us right back into the demand zone that we identified on Monday. We saw our price has consistently respected the 0.6700 level multiple times, and right now price is right within that demand zone. So are we going to continue to see price respecting that area one more time? That is price respecting it to the upside. That is one scenario. Or are we going to be having price do an outright breakdown of the demand zone where a retest substructure will give us confirmation to join a trend continuation to the downside? So going into the New York session today, this is what we want to be looking at. So in order to do this, we want to scale down to a much lower time frame where we want to see how participants in the market are relating to this demand zone at around the 0.6700 level. So let's scale down to a much lower time frame. So the lower time frame we'll go to is the 1 hour time frame, and let's see what structure we have here. So now if we zoom into the structure we have here on the lower time frame, what's the first thing we saw? We saw this impulsive move to the downside. We saw price come here, tested the 0.67230, came back to the 0.67500 area. We saw price come back again to the 0.6700 area, and we saw another intention of moving to the upside. So right now we have a consolidation phase right now where participants are looking forward to a catalyst, or probably wondering if the Aussie is quite cheap to buy at this point. So now, in order to do that, what we want to do now is to identify the structure here, and let's see if we could have a structure to play around with going into the New York session today. So I will be scaling down to the 15 minutes time frame. So we want to see the structure, we want to see what is happening here, and then we bring out our line chart. And the first thing I will be doing here is to connect this point. Please allow me to hide this demand zone so that we can have a better view. So we have something like this here. I think somewhere around the 0.6400 area. Okay. Yeah. So for the sake of clarity, let's label this. We have 0.67400 level. Okay, so we give this a black color and then place it right at the top, right inside of our screen. Is this not too big? Let's make it a little bit smaller. So we have the 0.67400 level to guide our action during the New York session today. So how do we intend to take that? Then another thing I was able to identify is this trend line here. Okay, so we have a structure. We have two structures to play with going into the New York session today. So this is what we have here now. So now let's go back to our candle chart. So we have a structure. So we saw how price broke down the level we just identified here at the 0.67400 area, and then since then we have been seeing multiple rejection of that level, and this is evident as we can see selling pressures from this point. We saw selling pressures from this point as well, and during the early hours of today we saw selling pressures at this point as well. So now as we head into the New York session, the only thing that will make me to buy, remember we are within a demand zone, which I showed you on the higher time frame. We are within a demand zone, and we can see how buyers are trying to take back the, we saw the rejection here, price came back, it's still within this demand zone. Buyers are trying to push price to the upside at this point. So what I'll be looking forward to here, if I am going to be buying the AUDUSD, considering the fact that we are within a demand zone that has a memory of buying power, what I'll be looking forward to is a breakout of the structure. So if a breakout of the structure happens during the New York session today, there is a likelihood that we want to be taking a counter trend opportunity if price does a retest of the structure. So if a breakout happens that is taking out all the selling position at the 0.67400 area, then we want to be joining the rally to the upside after multiple rejection of that level. So if a breakout happens, we wait for a retest of structure, then we join the rally to the upside. So that is the first scenario we want to be looking forward to. And if that happens, we want to be having our take profit target right within our golden zone area in the meantime. So our golden zone area is an area between the 50% and the 78.6% of our previous impulse leg. So we have our impulse leg like this, and then running Fibonacci extension through the previous impulse leg, we have this, and then somewhere between the 78.6 and the 50% area is a key level, is a golden zone we want to be looking for take profit target for any buying opportunity here. So let's place this right in the center. So that's the first scenario we are looking forward to. So if a breakout happens, retest of structure, we want to be buying. That's the counter trend opportunity. However, considering the long-term bearish momentum here, it appears that with the multiple rejection of this level, we want to be looking for bearish momentum. So if I want to be looking for bearish momentum here, and I want to be looking for further confirmation of this bearish momentum, I want to be looking at somewhere around the 0.67250 area. So if I see a breakdown of the 0.67250 area today, hold on, let me push this out a little bit. So if I see a breakdown retest of this level, then we might want to be joining the decline to the downside. So this is one thing we want to be looking forward to during the New York session today. But let's scale up again and bring back our candle chart, our demand zone area. I'm still doubting that selling opportunity here. So the reason why I want to bring up my demand zone again, and let's look at it one more time if we're going to be having. So we have a demand zone here, and this area has a memory for buying power. We can see how this has been respected. We had multiple rejection in the month of July. We had one during the first week of this month, and then we have price right within this area. So for selling momentum here, please, let's hold on and see price break down this demand zone. Let's see price break down this area. At least we have an outright breakdown of the zone. Then we want to see this as a signal of a bearish continuation. Then if price does a retest of structure, we want to be joining the decline. But if price breaks above the 0.67400 area, which we identified on the 15 minutes time frame, then that's likely going to be a counter trend. That is, price might likely respect this demand zone one more time in such a way that we might be having a retracement phase back into the bearish trend line that we have here. So this is how we tend to trade the AUDUSD today. If you have any questions, feel free to drop in a word or two in the comment section, and I will be willing to be of help. So moving on to the next pair, we have what pair do we have here right now? We have the EURUSD. So on the EURUSD too, we have a similar scenario. We were stopped out at our break-even level. Remember, we had this okay, let me quickly show you the scenario we were expecting yesterday. We had this setup, hold on. So I'll quickly run through the scenario we were expecting yesterday. Then I will be sharing how we might be intending to take advantage of an opportunity here on the Euro USD today. So now the first thing we observed here on the Euro USD is this bullish trend line. So this is our first parameter for the week. We had a bullish trend line here, and we can see our price has consistently respected that bullish trend line since the last week trading session, and we were using that as our guide for the week. Then during the live session yesterday, remember I told you I took this trade right above this key level at the 1.0100 level, as price moved into the 1.01900 level, came back to do a retest of structure where I added more position to my existing trade. And we were at this point yesterday when I told you that if you are in this trade already, that you should move your stop loss to break even or somewhere right below the 1.01450 level. And we were actually looking forward to a bullish trend continuation. That is, if price breaks out of this 1.01900 level, where a retest of structure will give us further confirmation to join the rally to the upside. However, that did not happen, as we saw this engulfing bearish candle taking us right out of our position. So on the Euro USD as well, we are neither in profit nor we in a loss position at this point. So now that we have this scenario here, I would like to delete this, as this is no longer relevant at this point, and let us see if we can take advantage of a trading opportunity during the New York session today. So let's scale up to the daily time frame and let's see what is happening from an holistic perspective, after which we will be thinking of an opportunity for the day. So now on the daily time frame, we have this bearish trend line. We have our price as continuously respected that trend line since the beginning of the year, and we can see in the last couple of months we saw how the demand zone at around the 0.98900 area has rejected price action. So this simply tells us that the buyers are having it strong here. That is, there is a buying power within the zone. You can see multiple rejection by the buyers from this level in the last couple of months to give us a clue into the strength of the buyers at this point in the market. And another thing I also let you know is that this level has been the lowest point price has been in the last 20 years. And there is a likelihood that participants in this market might be thinking that this level is cheap enough for us to buy the euro against the USD. As you can see, the engulfing candle that took price away from the 1.0100 level came right to the demand zone and it stopped there. And since the beginning of today, we have been seeing bullish setup coming in. So now that we have this kind of scenario, what we want to do now is to scale down to the lower time frame to see how price action is relating with this demand zone here. Then we look forward to probably a possible bullish momentum that is likely going to break out of this bearish trend line, or are we going to be having a breakdown of the demand zone where a retest of structure will give us further confirmation to join the decline. So this is what we want to be looking forward to in the New York session today. So what I'll be doing right now is to scale down to the much lower time frame. Let's go to the 4 hours time frame first before we move on to the 1 hour time frame. So now on the 4 hours time frame, what do we have here? Like I said, it's more or less visible that we still have the strength. Buyers are still very, very strong at around the 0.9900 level and the 0.99500 area. Okay, so we have this potential bullish setup here. We have a reversal setup happening around this area. So let's scale down to a much lower time and let's see what is happening here. So if that reversal pattern happened before we scale down to the lower time frame, there is a likelihood that price could come back into the neckline we identified as 1.0100 level. That is one thing. So if we are going to be taking a buy opportunity Remember, we are still right above the demand zone, which is reasonable to buy from this point into the key level here, which will probably give us around 100 pips. So what we want to do now is to scale down to the 1 hour time frame. Let's see if we can cite a reversal pattern here. So let's go to the 15 minutes time frame, a much lower time frame, and let's see what we have within above that demand zone. So we can see the impulsive move yesterday. We saw how we took price right into the structure. Since then we have been seeing multiple rejection of that demand zone. We saw the first one, we saw the second one, and price came to this point. So what I would do here is to bring out my line chart, and let's identify a neckline of a reversal pattern here, and then we can see that somewhere around the, I think somewhere around the $1 mark appears to be an area to look out for. And if you consider the nature of this level, you will agree that this is a very strong psychological level. So we want to see how price is going to relate with the $1 mark right now. Now let's okay, let's give this a black color. Okay, and then okay, so this is what we have here right now. Let's go back to our candle chart. So we have a structure right now. We have something that looks like a double bottom structure. Let me show you what that is again. We have this move to the downside. Price rejected our demand zone. Price came into the $1 mark, rejected it, and what did we say during the early hours of today? We saw an outright breakout of the $1 mark area to give us a signal of a possible bullish reversal pattern. So now that we identified this level right now, what we want to be doing is to be patient enough to wait for price to give us further confirmation in the form of a retest of the structure. So if we have a retest of the structure, we look out for patterns to join the rally to the upside. So this is what we are going to be doing on the EURUSD today. So let's wait and see how price is going to come back and relate with the $1.00 level. So if price is going to reject this level multiple times, then we want to be joining the rally to the upside. So that is that on the EURUSD. Then we went on to talk about the Ethereum. Ethereum too has the similar scenario. So for the Ethereum, I hope you took advantage of this move. Remember, I shared with you the scenario yesterday. I told you that if we have another rejection, if we have the first scenario was if we have a breakout of the structure, that is this bearish trend line here. If we have a breakout, then a retest will give us further confirmation to join the rally. Let me show you what this was the first scenario we were expecting yesterday. We're expecting this breakout retest of structure to the upside, and that's one. Then the other one is a breakout of this level retest to the upside. And then I also told you that if considering the strong term bearish momentum here, that if we have a rejection of this bearish trend line on the lower time frame, we want to be joining the decline. So now that we have, if you scale down to the 15 minutes time frame here, I think we had enough signal at this point to join the decline. We saw the breakdown. We saw the multiple rejection of this level before this price moved to the downside from here. So if you have taken our move, kudos to you for identifying that. But right now we have a scenario where price is right at the bullish trend line we identified on the 1 hour time frame. Hold on a second. Let's go back to the 1 hour time frame here. So we have a bullish trend line here. What's happening? Okay. So on the 1 hour time frame here, we have a bullish trend line. I think I'll just have to go to the 4 hours time frame so that we can have a better view of what I'm talking about here. So we have a bullish trend line here after connecting the series of higher lows. We have the first touch here. We have the second one. We have the third one here, and price is right back within that area. So I want us to be wary of taking any bullish momentum at this point, because if we look at the last time price, the previous high here is at the key level at the $2,000 mark, and the second high is around here. So it's a higher low. So when we say higher low like this, what are we looking forward to? A bearish momentum. Now, in addition to this information we have here, we identified a key level, at $1,640 level, which was broken yesterday. And what did we see here? We can see that since price broke that level, we have a scenario where price has been caught within a consolidation phase here. So one scenario is this: there is a likelihood that price will come back into this bearish trend line to send price crashing to the downside, or we could be having, hold on a second, let me push this down a little bit so that we can extend this. So like I said, we could be looking forward to price coming back into this area where we look out for patterns to join the decline here. That is one scenario. Then the other scenario is there is a likelihood that price could break down, retest, then we see a trend continuation to the downside. So at this point in time, it's still looking very, very bearish on the Ethereum. The only way we want to be buying the Ethereum is only if we see price break out of this trend line. So if price breaks out of this trend line, then a retest of that structure should give us a confirmation to join the rally to the upside. So if that does not happen, we are looking forward to selling momentum here on the Ethereum. So that is that on the Ethereum here. All right, so without further ado, let's move on to the next one. I think the next one is the gold, which I will quickly run through because of my time constraint. Let's see what happened on the gold twos. I think gold 2 also have the same similar scenario with what we have on the major pairs we deliberated on. We saw the consumer price index affects price action, hereby pushing price to the downside. And thank God we locked our profits as advised. I hope you did. And if you had done that, we will be in a break-even position here as price continue to the downside on this one. So right now we have a breakdown of this bullish trend line, which was identified here. Let me clean my screen so that we have a, okay, so we have a better, let me clean my screen here. So we have a breakdown of the structure. So what I'll be looking forward to here, and another thing is that we have within a demand zone here, and we can see how price has consistently respected that area. We see our buyers come here to buy the gold, and right now we have witnessed a consolidation phase around this area. And you can see in the last 10 hours, we can see our price has consistently rejected that level, giving us a clue into the strength of the buyers at this point. And if we scale up further to the upside, that is on the daily time frame, we can see that price is respecting that bullish trend line that we were able to connect after identifying the higher lows. Hold on a second, I will show you what that is in a moment. So we have this bullish trend line that has been holding price action since let's see, since 2018. So we have this bullish trend line, the green one here, and price appears to be rejecting that bullish trend line one more time. So let's go back to our lower time frame and let's see how we could take advantage. Is there going to be a bullish trend continuation here, or we are going to be seeing a breakdown of this bullish trend line? So if I want to be selling the XAUUSD now, I want to see price break down that bullish trend line here, give me a signal like that, and then a retest of that structure will give me further confirmation to join the decline. And remember, we have this descending channel here, so the retest of structure might align with this resistance point of the descending channel we identified here. So this is how we want to trade the XAUUSD. So if price breaks down this level, that's a signal, bearish signal, then a retest of structure will give us a confirmation to join the decline. Now, considering the fact that price is right above the demand zone, we might be thinking of buying this XAUUSD. Well, my advice here is that it is not comfortable to be buying the gold unless we see price break back above this trend line. So if price breaks above this trend line, we want to see this as a signal, then we wait for price to give us a retest of structure, then we look forward to a trend continuation, probably with the hopes of retesting this bullish trend line that was broken during the course of yesterday's trading session. Here we saw the breakdown of that structure, and from a technical standpoint, we expect that when price breaks down a structure like this, we expect it to come back and do a retest of that structure where a patterns could support a trend continuation to the downside there. So this is how we intend to trade the XAUUSD. So let's hold on, let's be patient to see how participants is going to relate with the demand zone here. How we're going to be having a breakdown of this demand zone where a retest will give us confirmation to join the decline, or are we going to be having a breakout of this resistance point where a retest will give us a confirmation to join the counter trend opportunity right back into this bullish trend line that we have here. So this is what we want to be looking forward to on the gold. If you have questions, feel free to drop it in the comment section, and I will try to be of help in that regard. So let's quickly run through what we talked about today. Let's do a recap of what we talked about today. I'm already out of time now. And then the first pair we talked about is the US oil. And on the US oil, what is our expectation here? So on our expectation here is this. We have this parameter here. We have this bullish trend line here, which I was able to identify this purple line here to guide our action going forward. Now, how do we make use of that trend line? So we have the trend line here, and we have the key level at the $87.70 area. So how do we make use of both these parameters now? Now, the only way we can use this parameter is this. One, if price breaks out of the $87 level, I want to see a significant breakout of this level. Then a retest of the structure, that is, price comes back to do a retest of the $87 level, or probably the bullish trend line here, after which I look out for patterns on lower time frame to join the rally to the upside. And remember, I told you that if price rejects this level multiple times and we see structures to join the rally to the upside, if price continue to move in our favor, hold on a second. So if price continue to move in our favor to the upside, I have told you to move our stop loss to break even at right above the $87.70. And the reason why that is simply because of the structure we have here. We can see that price rejected the $89 level during the beginning of the week. Then we saw another rejection during the New York session yesterday. So what we want to be seeing is we want to see how price is going to relate to this level here. Then if we have a breakout retest of that structure, then we want to be comfortable in our buy position. So because of this, I have advised that when we see a breakout retest of the structure and price continue to move in our direction, move your stop loss to break even to protect your position. So that is the first scenario we are looking forward to. Then the second scenario we are going to be looking forward to is a bearish momentum. And the only time we want to be selling this is when price breaks down this bullish trend line. So if we see an outright breakdown of this bullish trend line, we want to see that as a signal. We already have a breakdown here once during the New York session yesterday, and we want to see a breakdown happen. If that breakdown happens, remember, we don't want to get too excited at the sight of such a signal. We want to wait for price to give us further confirmation, which is likely going to come in the form of a retest of structure, where we look out for patterns to join the decline to the downside. So if a decline happens, remember we have this descending channel here. We might want to see price come back to as far as the $80 level. But one thing I would like to say here is this. We have a key level at the $85 mark. As soon as price gets into this area, that is, if we are selling this one, that is, we see a breakdown retest of structure, we want to move our stop loss to break even as soon as price gets into the $85 area, or lock in some profit right above the $86.50 to protect our position against any sudden pullback that could happen here. So if selling momentum happens at $85 area, move your stop loss to break even. Then we moved on to talk about the AUDUSD, where we are looking at a bullish momentum to happen if price breaks above the 0.67400 area. So we had the 6700 area identified on our lower time frame. We had this trend line also, and I stated here that if we have a breakout of the structure, that is price breaks above the 0.67400 area, we want to wait for price to come back to a retest of structure, after which we will join the rally to the upside with a take profit target right within the 0.6800 level and the 0.68800 area, as we want to see how price is going to relate to that level. Now, to sell the AUDUSD, to join the sell continuation here, if price breaks down this demand zone here, then we want to be looking for selling opportunities at the retest of structure to join the decline. Then we went on to talk about the EURUSD, and on the EURUSD we also have a similar scenario with what we have on the AUDUSD. And what we can see here, we can see that we already have a breakout of that structure. So what we are waiting for is to wait for price to come back and do a retest of this area. So this retest, please be patient, please. We want to see multiple rejection or a sharp rejection of the $1 mark to join the rally to the upside on the EURUSD. Then we went on to talk about the Ethereum, where I told you this is the setup on the Ethereum is more or less bearish at this point. So the only way we want to be selling the Ethereum is to wait for price to come back into the $1,690 area, where a rejection of this level, which also shares a confluence with that bearish trend line, we want to be joining the decline from that point. However, if price does not go that far and price continue to the downside here, where we see a breakdown of this bullish trend line here, then that will give us a signal of a bearish momentum. Then we wait for price to give us further confirmation in the form of a retest of structure to join the decline to the downside. Now, if you are thinking of buying the Ethereum now, the only time I will be suggesting to buy the Ethereum is when you sight a breakout of this bearish trend line. That is, breakout of this bearish trend line, retest of structure to join the rally to the upside. So this is a very long term perspective. If you are patient enough, you might want to be waiting for that opportunity to happen. But if you are a counter trend trader or a short term trader, you might want to see price break above the $1,640 area, a retest of that structure, then a rally could confirm a rally to the upside. And then if price breaks above the $1,690 area, which also shares a confluence with the bearish trend line, a retest of that level, you could add more position to your existing trade. So that is how we intend to trade the Ethereum. Then moving on, we talked about the let's see, the gold. We have gold here, and then on the gold too, we're only looking for bullish momentum if price breaks above the bearish trend line here. So let's see if price is going to break above this bearish trend line on the daily, during the New York session today. If that happens, then a retest of this level with multiple rejection or structures on lower time frame that supports a trend continuation, we want to be joining the rally to the upside. And the reason why that is simply because, remember, we had this bullish trend line here that was supposed to be our guide for bullish momentum this week, and then we witnessed a breakdown of that structure during the New York session yesterday. And from a technical standpoint, whenever we sight a breakdown of structure like this, we expect price to do a retest of that structure to give us a confirmation that price might be going towards the prior leading price actions direction. So this is what we are looking forward to. A breakout of the structure gives us a confirmation that a bullish momentum is likely possible. Now, if we see a breakdown of this bullish trend line, remember this is the bullish trend line we identified on the daily time frame. If we sight a breakdown of that area, and you can see we have a demand zone here, that this price breaks out or breaks down this level, taking out all the buying positions here, then that's the signal we are looking forward to a bearish momentum. But remember, we are not getting too excited, as we want to wait for price to give us further confirmation in the form of a retest of that structure, where patterns on lower time frame will support a trend continuation to the downside. So that is how we want to trade the XAUUSD. And on this note, I would want to call it a day. I really appreciate every single moment with you guys, and I hope we are prepared for the New York session. And like you saw what happened yesterday, it was a dramatic move yesterday, and if we are not cautious enough by locking in our profits, we might be have been in a massive loss at this point in time. But thank God we were able to lock in our profits, and though we were in break even at this point in time, let's look forward to the New York session today, and let's see if we are going to see momentum, we are going to see traction that will lead us right back into our profit zone. So and also remember, we're not getting too excited at the sight of a signal. Whenever we see a signal, we want to wait for confirmations to happen, which is likely going to come in the form of a retest of structure before we join the potential momentum that is lining up for us. So I think I will have to call it a day at this point, and let's see how price action plays out in the next 24 hours, and we shall come back here tomorrow, same time, 10 a.m. UTC, 11 a.m. West African time, and let us look at the chart again to decipher what is going on and how we plan to trade for tomorrow. So on this note, I wish you a wonderful day, best of luck, and bye bye.